So the institutions that we work and the clients we work with, I think one thing that we really stress is just intentionality, right? Talking to people about like, okay, what are the things that you really want to focus on, or what are the things that you really believe long or short term might happen or otherwise occur that you really want to just be intentional about. So, if you want to de-risk out of a position, right? If you made an investment and you've made some money on that and you want to de-risk out of that, don't do that tomorrow, right? Do that slowly over time with a lot of intentionality. Let's work with you to create a plan and kind of a course of action that makes sense there.
Hi, everyone, and welcome to this episode of the show. Today we have John Peurifoy as a guest. He is the co-founder and CEO of Floating Point Group. And Floating Point Group is a company that specializes in smart order routing for cryptocurrencies. Prior to founding this company, he studied electrical engineering, computer science, and physics at MIT. And John, without further ado, thank you very much for joining.
Well, Nick, first off, it's really great to be here. Thank you so much for having me. I'm a really big fan of the show. And yeah, I'm really excited to dive into a lot of the topics today. I will definitely say that the crypto world has not been shy about being in the spotlight and the news lately. So yeah, it's very timely that we're having this conversation.
Fully agree. So if we started off by talking briefly about your company at large. So if you just describe Floating Point Group in more detail than just saying smart order routing, for people to get the flavor of the kind of things that you do.
Yeah, absolutely. I'm more than happy to. So when I really think about what Floating Point Group does, it's really two core product lines, right? The first of which is agency OTC execution. We work with large institutions, venture capital firms, blockchain foundations, groups like that to help buy and sell cryptocurrencies very seamlessly and effortlessly, right? If you're a company, you don't want to onboard with every exchange, find every person that might be buying or selling Solana. And so you want to try to go to some place where it has aggregated liquidity. And we walk people through that, right? So we have a desk that's staffed between, worldwide and 24/7. And that's kind of with the guiding intention of like, how do we make it easier for people to be able to trade these cryptocurrencies? So that's one leg of the business. The other leg of the business is we do stuff around settlement and kind of enabling people to very easily and effortlessly access their funds across exchanges, across wallets. We host 600 wallets and accounts across different parts of the ecosystem, blockchain wallets, custodial wallets, exchange accounts, etc. And so we created a system. It's effectively a technology platform that enables people to very easily see where all they have their money, effortlessly move it around, and make sure that they kind of get instant access across that ecosystem. So that's really what the core of it is. We've definitely evolved over the years. I think now where we are today, we really run kind of one of the largest altcoin execution desks on the market. So whenever people are looking for really good prices and kind of people that are very partners, so we try to take a very collaborative approach with a lot of the deals that we work on. That's kind of really the audiences that we focus on. So yeah, sorry, that's maybe a little bit about us. I apologize for the great many words on that.
No, that's perfectly fine. So in terms of how you actually evolved over time, can you speak briefly about that? Like, what did you start doing? How did that evolve over time? And what are the guiding observations from your perspective that led that transition?
Yeah, I love your question. So first off, I have no idea what I'm doing about a great many things in our business, right? I think most of what we've learned and built, we've had to just discover and we've had to learn. We started back in 2018 when the crypto market was in a very, very, very different environment. Effectively, a colleague in my fraternity came up to me and was like, John, I've got this idea. We should really go look at crypto. And at the time, I was going to go start a PhD, right? My work was like in artificial intelligence and kind of building models and doing analysis on those and things like that. And yeah, I was gonna start the graduate program at MIT. And my colleague from my fraternity really was convincing, right? So he convinced me to kind of jump in arms deep. And so we kind of went in and we started building that out. And then I instantly called one of my other friends and I was like, hey, I'm doing this thing. You should come join. So that was kind of our, 2018. We were fortunate. We went through an accelerator put on by MIT called Delta V. And they kind of helped us, initially kind of get our legs. And in the beginning, we were mostly just a hedge fund, to be honest with you. We were doing quantitative trading. We were trying to find ways to make alpha in the markets, I think as many people do. And I think as we built that, we just realized that it's really hard to do, right? It's really hard to get all the accounts and access. It's really hard to get the data. It's really hard to build the technology. It's hard to make sure that you're just operationally safe and that, you're not going to lose money and things like that. Like risk management, right? These things that in traditional finance are very embedded and people are very familiar with, they didn't exist, right? We had no concept of them. And so we started, having a lot of friends come to us too, being like, oh, we know you guys trade. Like, how do you do it? X, Y, or Z, can you help us with this? And that was kind of the genesis of the business, right? And so that ultimately, bubbled up where, we had these massive multi-billion-dollar asset managers coming to us and saying, hey, we want to make some investments in the space, or we want to sell some assets in the space. How do we do that? You guys seem to know a lot more about that than we do. Right. And so we started working with these really massive institutions. And that was really cool for us, right? Being super young and kind of coming and meeting all these bankers, and you're like, I don't really know what I'm doing here. But I guess they trust us. That was really awesome. That was really incredible. And I'll just be, as a human, like, that's, I think, one of the coolest things ever, right? So we learned that, and we kind of went through that. And then I think slowly as we built up, we started really getting a niche around working with blockchains and foundations and ecosystems, right? I think crypto is great. I think it has a lot of promise for the world, right? I think crypto can solve some of the biggest problems in society around data privacy and actually around worker automation and helping, automate the flows of funds and money and just improve the efficiency of financial systems, right? Like, banks have pretty much held a chokehold on a lot of financial innovation over the past 20, 50 years. And I think this is the first chance that we really get to fix that, right? So the idea being there that, okay, how do we just build better systems for this? Okay, well, we package that up as a technology layer. We then started offering that to blockchains and foundations that maybe wanted to sell tokens, right? Like, one of the groups we work with is, say, Algorand Foundation. And with them, they have these tokens that are vesting over a long period. And they want to be intelligent about selling those slowly over time. And they want to do that in such a way that doesn't impact the market, right? And so if you kind of study the markets, you'll kind of find that, you can go and put orders on the order book, but if you put them at the top, that's maybe not the best part, because maybe every order goes 5 or 10 levels deep. So maybe it's better to put it halfway through that, because there's more liquidity there, right? You can do a little bit better on pricing. So there were like these optimizations you can do, right? And that's kind of how we thought about it, is just data optimization problems. So we started building those systems. We offered those solutions to blockchain foundations, groups like that. And that was really a big niche for us. So that was kind of something that really, really built out. So yeah, I think that that's kind of where we've always kind of sat. I think one of the evolutions in the space that we've seen a lot is just that people have gotten a lot more serious about this stuff. I think in the beginning, people were just kind of like, oh, like, I need to sell X, Y, or Z. How do I do it really fast and get it done? I think now they're more considerate of like, okay, what's the effective pricing I'm getting on that? Or how is that being actually impacting the market? Or what does that look like? So yeah, I think to your kind of essential question over like, how has it really evolved over time? I think it's just become a lot more sophisticated. I think in the beginning it was kind of two guys with a laptop, and I think now it's, this like worldwide group that kind of works on these things.
Exactly. And in terms of your involvement with some of these companies, so I know that you provide like platforms for people to actually manage with direct market access, sort of how they liquidate their assets. If you were to give a rough estimation of how many of your clients actually rely on you actively managing the trades, and how many are trying to sort of take that on themselves, because I have some follow-up questions on maybe the execution of that, but just as a starting point.
Yeah, you have a great question. So this is really a dichotomy that we've struggled with for a long time. So our agency business is really the bedrock of our company, right? The majority of our execution is done in that way and through that, right? It's groups coming in wanting to buy a bunch of Solana or sell a bunch of IOTA, things like that. We just naturally do a ton of trading volume, right? And do these things. And so, we always kind of have conversations with people who are like, okay, if you want to more actively, work your trades, how can you do that? So to your question over like how many clients actively manage trades versus manage themselves, I'd say that by far the majority, like, we manage it entirely. I would say with some, it's like, okay, we launched this partnership around separately managed accounts. Effectively, if you're a fund of funds and you want to allocate to a manager, right? It's kind of scary to just like give them money, right? Because like, you're giving money to a hedge fund, and crypto money can kind of be gone very quickly. And so ideally you want to kind of put that in a secure place, but where the manager, right, whoever's trying to start the hedge fund, they still have a way to very easily use that money, right? They can still trade on exchanges, they can play with it in DeFi, they can do those things. So we set up the solution kind of for separately managed accounts where investors can put money in those. The managers can then have power to be able to trade and interact on those, but they can do that in a secure way where they kind of, the funds are safe. So that's kind of how I think about the two sides of that. So to your question around how many clients, yeah, by far the majority, we kind of control a lot of the trading. I am definitely excited by kind of giving those more widely out as well. And I think the separately managed accounts thing is kind of one thing that at least we've had a lot of success with, and we've seen that really take off.
Mhm. And in terms of the ones that you actively manage, so now you're more or less an established player in the space. So you have some, let's say, you've got the ball rolling already in terms of acquiring clients. In the beginning, especially, how do you actually convince people that you can sort of deliver on this promise? Because the crypto markets are at times at least extremely volatile, and even if you're as a company like in your position, if I wanted to give some form of assurance that I can give you sort of the money back that you're roughly expecting on the assets that you hold, what was the strategy originally, and maybe what has it evolved into in terms of how you actually get clients to be comfortable with the offerings that you have?
I Nick, you are asking one of the best questions of all time, which is about trust, right? How do you get people to trust you, and how do you make sure that you continue to build that trust? When we first started, the line that we always used was, we have more to lose than you if this doesn't go right, right? Like, we started doing simple trades, like very small trades, right? Like $1 million trade or a $2 million trade or whatever, right? The risk was comparatively small, right? Compared to like some of the things we do now that are very, very, very large. So the line we kind of always used was like, we have more to lose than they, right? Like, if we took their money and we tried to, if we just did a bad job, right? Like, okay, like maybe, we would like fraud or, steal things like that. But I think people generally understand that the odds of fraud or stealing, like, while those are real concerns, they are not the more likely cases, right? Because there's real recourse right there, right? Like, the government will come after you for those things, as the government 100% has been doing with a lot of actors that ever did those. So yeah, I think the key line is like, we have more to lose than you, and it's probably, you're not going to like lose it by like stealing your funds. It's probably more likely that like it would be negligence, right, or something that we mess up or don't do correctly. And I think that is more an operation, and I think being transparent with people and showing them how you think, right? Crypto's this really funny place where I don't understand a lot of what other people do, right? We were talking to this group the other day about running a validator or an oracle and trying to understand what that looks like for their ecosystem. And I'll be honest with you, I don't know the first thing about actual blockchains. I'm really bad at them. Um, but I think, in those cases, I think having transparency and really informing people, like, okay, this is how you think about it. Like, this is how we're going to do it. Like, we're going to take your funds in, we're going to put it in a segregated wallet. We're going to move a small portion of those onto exchanges. We're going to do the transactions. We're going to be sweeping those funds off the exchanges that those come out. We're going to be minimizing counterparty risk there. We're going to be watching the exposure levels. Someone's watching the trade 24/7, 365 through all holidays. I think having that conversation with people and being willing to talk about that is really powerful. Which I think is the other line, which is, there's a really funny story where I was once talking to this guy about security, and he was like, how do you know that you're secure? How do you do it? And I started walking him through it, right? I started walking him through, okay, well, we use these secure enclaves, and we have this encrypted database, and we have all these structures. And he just said, stop there. I'm going to be honest. I'm super scared right now. Those are not good answers. And I was like, no, but they're technically right? Because I come from an engineering background. I'm like, that's technically right. And he gave me, I think, the best line I've ever heard on security, which he said, John, the reality of security is one that it never sounds good when you go into the details. So it's typically better to just point to things that are secure, right? Point to audits you've had third parties do, or point to industry best practices that you follow. Because the reality is that the sausage always doesn't look great. So it's important to kind of compare it, right? To level set it, to kind of show it. So anyway, that's kind of how I think about trust. I think at the beginning it was very much, we have more to lose than you, and really just explaining to people on a personal level, like, this is how I'm going to do it, and gaining that trust. I think nowadays it's more about really professionalizing that message. And I think you're right. I think we got the ball rolling on a lot of that. So naturally we have a lot of things in our court. I think trust is actually something that comes up less and less in conversations today than it did initially.
Mm-hmm. And given some of the recent market events, so like, let's say Terra Luna, FTX, things like that, has the sentiment somewhat changed among clients for their susceptibility to investing in crypto to begin with? Like, do you feel like recently there's been a lashback in terms of that, or?
Yeah, you have a brilliant question here. I can say at least what I've seen in the space. So first off, maybe let's just talk about the more recent run-ups, because I think those are easier to kind of think about and contextualize. So when all the banking floods started happening around Silvergate and SVB and everything, and I'm more than happy to talk about things kind of related to Signature, but when the banking floods started happening, people flocked to stablecoins as like a way, right? Because like, I'll be very open with you, like the way we were thinking about that and the position that we were in, as many other firms were in, are, do you trust your money to be in banks? Do you trust it to be in stablecoins? Do you trust it to be with counterparties on exchanges? Like, where do you really trust to put your money? And so the reason I say this is, I think what we approached it was like, we were like, we want to diversify it, right? Like, I don't really know where the safest area in the ecosystem is, but I do know that there's risk everywhere. So it's probably good to at least spread that, right? Spread it across banks, spread it across stables, kind of spread it across assets that we feel relatively secure. And we ranked those assets to kind of, which ones do we think are best versus, which ones might not be the best, and kind of went through that. And then we kind of allocated across. So at the end of this process, the reason I say this is people ended up really flocking to Tether, right? Tether was, I think, what a lot of people saw as like something that was at least somewhat decoupled from banking concerns in the US. The problem is then you have a bunch of Tether, which, don't get me wrong, Tether's great. I have a lot of comments about how Tether has done an incredible job taking over market share, but I don't think Tether is the most transparent. And I think that they've kind of had a number of historical incidents around that. So I think people are generally concerned. So if Tether isn't a good alternative and USDC isn't a good alternative, then pretty much the only thing left is buy Bitcoin, which is, I think, really what drove a lot of the recent rally we saw, right? I think people were coming to the realization that stablecoins are pretty uncertain. And so the only certain thing they got is Bitcoin, and they would rather take the price uncertainty than the counterparty uncertainty. So the reason I say this to your kind of first question of investing in crypto is I think these are the flows that are really dominating a lot of the space right now, where it's people are almost just trying to de-risk. So they're getting into different assets or they're moving money across the ecosystem because the on-ramps and the off-ramps are so hard, right? Signature coming out and debanking all their crypto clients like this week and last week, that's heavy news for the ecosystem, right? That really impacts flows. And so I think people that already have money in crypto, it's just a game over where is the best place to put it. And I think people that don't have the money in crypto, their options are limited as to how do they get into the ecosystem. And we've been having a lot of conversations and calls with people about that, particularly on the institutional side. And I think on the retail side, it's still really hard too. So I think when people think about investing in crypto, I think there's just a lot of very like under the water currents that are happening that really make it very non-intuitive, like where the water level is going to go, if that kind of makes sense. Sorry, that's like a terrible analogy too. Yeah.
No, I think it's fine. I want to stick for a minute on stablecoins in general,
Yeah.
because I looked at this graph of where funds are allocated in terms of a stablecoin. So there's a breakdown. I'll put this up for the interview as well, but there's a breakdown between uncollateralized stablecoins, on-chain collateralized ones, and off-chain collateralized ones. And you can see that the uncollateralized one is very big up until the Terra Luna incident, and then after that it's been sort of non-recovered. Do you think that there's a way back for algorithmic stablecoins, or do you feel like that's a dead space? Like, I would be very interested to hear your take on just the overall allocation there, whether there's a way back for it or not.
Yeah, I'm gonna forget about this. There was a stablecoin more recently. It was either Make or Die or I think Binance US or BNB. I apologize, I don't remember which, or BUSD. Sorry. There was one of them that was actually starting to buy some Bitcoin with their amounts. I think algorithmic stablecoins 100% have a future and they will have a place. Because I think two reasons really motivate that. One is USD denominated stablecoins have the inherent risk of USD and where that goes. And we are seeing pretty massive questions come out right now around the staying power and hegemony of the US dollar. And I think those are very open questions, and I think they're going to have very real impacts on the ecosystem.
Sorry for interrupting. What would you say those are?
The BI, like the very easiest example is the recent news around the Bank for International Settlements, right? The BIS expanding its coverage between more countries, the Saudi Arabia deal, striking it with kind of China, denominating it yuan. And then there's the other argument between the collaboration of like Russia, China, India, and Brazil, right? The BRIC countries kind of actually coming out and really just doing more economic activity together, non-denominated in US dollars, right? Like there is genuine existential risk to the US dollar's hegemony, in my opinion. And it's going to be slow, right? But the US has been weaponizing the dollar for some time, blocking OFAC countries or blocking banks from the SWIFT systems because they were actors or related to Russia, right? Those are pretty serious actions. So if you're any foreign national, why would you ever trust putting money in the US system? Because you could be incredibly nervous that the US government deems you a national security risk and freezes your money. So diversification of your funds is absolutely vitally important. 90% of the world's economic activity is typically denominated in US dollars. Any person who's transacting would probably look at that and say, I would like to diversify and make that at least 70, 60, or 50 or so. So anyways, that's kind of, I do think the US dollar has pretty serious hegemony concerns.
Mm-hmm. Okay, yeah, I agree. And I think you made one interesting analogy, I think, in a previous interview where you said it's like a phase transition in physics. You know, you made the analogy to you have
Yeah.
this domain that we're in currently, and then at some point, let's say you have a switch in base currency, and then all the funds essentially switch. So, I mean, it would be interesting to see, assuming we get a switch sooner or later, what the new allocation would be. My guess is you would have some base currency, and then you would simply see a switch of the majority of funds to that particular currency. But I'm very interested in what that currency might be. So, like, let's say algorithmic stablecoins, if we get back on that track, like, do you see that still as the most promising candidate, let's say, or what is your take?
Yeah, you have a good question. So first off, this is where I'll make a selfish case for Bitcoin. Go Bitcoin! Because I assume that Bitcoin in some ways could be that, right? I think Bitcoin has always tried to be the reserve currency of the world. Your question is hard, and maybe let me tackle it from a couple different angles. First off, let's talk about algorithmic stablecoins for 2 seconds. So the largest algorithmic stablecoin is probably DAI, right? Now, DAI also depegged during the USD banking crisis. Let's call it the banking crisis. So DAI actually depegged during the USD banking crisis, and that was because a lot of its reserve was holding USDC, right? And USDC itself depegged as well. And so people kind of looked at it and they're like, oh, well, even though it's a different stablecoin, like there's still a lot of inherent linked risk here. Now, the reason I say that is that kind of cuts at the heart of like, what is a stablecoin, right? Like, what are you actually tying a stablecoin to? Is it tied to a dollar, a yen, a yuan, like a renminbi? Sorry, I think those are actually all the same thing. I'm really bad at foreign currencies. But anyways, I think my question there is like, what do people ideally want? And I think the best way to answer that question is people want some asset to put their money in that will slowly, very slowly appreciate over time, right? The stupid way of thinking about this is you kind of want a way that is like the global inflation hedge, right? If there is some amount new value being produced every year globally, you want some currency that means that so long as you're holding value, your money is not losing, value to that inflation. The reason I say this is I think that this is a key consideration when thinking about algorithmic stablecoins or any type of long-term holder asset, because the concern about Bitcoin is that it's too volatile. Okay, fine, that's true. So then you need to curb the volatility of Bitcoin. But I think anytime you're just going to have an algorithmic stablecoin that says you give me $1, I can give you out $1, inherently you're coupling that to the US dollar, right? So I don't think that's a good way out of this problem either. So it's almost like you want to create some, like some like new asset that effectively would be less volatile than Bitcoin, but it would still be like, slowly appreciating very, very slowly over long periods of time. Like you have a really hard question, but that's at least how I'm thinking about it. I think that's what my answer would be.
Mm-hmm. What do you think is currently lacking in terms of getting more comfort in the crypto space? Like for people to move over? Because there's a lot of, scandals popping up. There's a lot of volatility, as you said, in some of the currencies. People are apprehensive towards stepping in. I think whenever I usually ask this question to people, the obvious answer is legislation. Like we need more legislation, and maybe that's a fair solution. Is that also your view? But in that case, I would be interested in going into more detail. Like what do you think is actually lacking in terms of legislation right now?
Yeah, so it's funny. So twofold. One, I'm really curious first off, I would just love a week or two without a bombshell being dropped. That'd be great. I think there's this funny video on Twitter that's like trading crypto. And it's just like a guy just being repeatedly like kicked, just like repeatedly and relentlessly just being kicked, which I think is a lot of what the space is in a lot of ways. So yeah, I think what's holding back a lot of people is that there's not 1 week without just some massive drop, which is really lame. Regulation is fertilizer. That's very true. I think regulation coming out. You asked what type of regulation? Well, I think first off, the US needs to be very clear about where it's positioning itself in the space and how it's positioning itself. The CFTC and the SEC need to figure out who's regulating what and how, because they're very different frameworks and they have very different processes involved for each. So I think that's one. Two is I think it needs to be decided internationally what jurisdictions want to take what level of kind of involvement with it, right? Like, we were hearing about initially like Hong Kong being really good, and then it was like really bad for crypto, and now it's kind of coming back for crypto. So I think that uncertainty, I think is really hard to navigate, right? Because no large institution wants to get in something when there's massive headline risk. Like if you're JP Morgan or you're Citibank and you're making $100 billion just in your normal businesses, is it really worth it for you to make $1 billion and risk upsetting regulators or getting fines or having the public be like, you're the crypto, bad group or whatever? So yeah, I think part of it is just regulation. Part of it, I think, is just calming the storm. I think the other statement to say here is like, it is coming. I think the biggest winners out of all the more recent activity is definitely the larger groups, larger banks and things like that, because they have both the compliance bandwidth to make sure that even if there are 10 bodies that are regulating it, they will submit applications to all 10. Right? Like that's just the way that those work. And that's why they have massive compliance teams. So I think the big winners out of this are definitely the big banks because they're going to be willing to go through that. And they already have the open channels where they can talk to the regulators and do those. I think the smaller companies I think it's the harder footing that you have. And yeah, but I'm curious, like you've definitely asked a lot of people this question. How have you found that answer change over time? I feel like people have always said regulation. I think now it's maybe most in vogue that I've ever heard it. But I don't know if you have particular kind of ways that you view it.
So I wouldn't say I have a long track record over time that I could really leverage and answer that question. I think what I've noticed is it's to some extent an evasive answer to the question. Like it's an easy thing to point to. Like we need more regulation. It's hard, I think, to come up with concrete points that actually need to change. Like what do we need in form of regulation to counteract some of the things that we've seen? Because obviously I feel like some of the things might not have happened if there was more regulation in place, but taking the next step is usually quite hard. So I don't know if I have anything more concrete than that.
Oh.
So I would be interested in as well, like on the US side, like currently the SEC, for example, I saw recently the entire thing with staking assets, like the pushback from the SEC on that. Has anything changed in that space? Because my understanding is quite a lot of your clients are also interested in staking. Like that one of the key drivers why they want to get into the space to begin with is staking. So what's your take maybe on if you want to go through what happened with this entire, SEC pushback, and then what your view is, whether it was right of them to do it or not, and then what you think needs to happen there and how that's affecting your clients. I know that's a lot of questions, but let's take them one by one and we'll see where we end up.
So it's a great question. So first, maybe let's just go through a quick chronology and kind of understanding of like what's going on where. This really all started a while ago, and I think the easiest way to think about this is when Ethereum staking really started to come out. Ethereum staking started to come out offering this idea that you could lock up Ethereum and gain some APY from it, right? And staking had existed before, right? Like some isolated blockchains or whatnot. Like we were one of the first people doing staking in the Blockstack ecosystem, for example. And so it had existed, but it never proliferated much. I think Ethereum was when it really brought it to the forefront, and you can see the TVL charts kind of really show that. So a number of groups came out trying to kind of release and do different things around this. Kraken, Coinbase, a lot of the major US exchanges. Then separately, but around the same time, Coinbase tried to release their Earn product. And if you remember this was actually quite interesting because when they tried to release their Earn product, they got pretty massive pushback from the SEC around the fact that that was a security, right? This idea that if they were taking and that was pretty much people like putting USD with Coinbase, and then Coinbase was giving them some interest on their USD or USDC, right? And the SEC was arguing that those were securities, right? That effectively those were instruments that were locking assets up and designed and designated for the interest of gaining profit. So the SEC kind of held that line. Coinbase fought against it a little bit, but Coinbase, I think, all in was like, the juice isn't quite worth the squeeze on this. So they backed off and didn't launch that, right? But it started setting the stage around how do we treat interest-bearing activity in crypto. SEC was making it pretty clear. They saw that as securities and kind of they wanted to make sure that that was really being held, make sure, only accredited investors and X, Y, or Z and lists like that. Then fast forward to Kraken, which I think was the more recent action, right? Kraken about a couple months ago got hit for effectively offering unregistered securities through their staking programs, and as a result, shut down their staking. Now, the important thing about that is that they really shut down the staking for the retail side. I don't know all the activity. I don't know everything that goes on at every exchange, but my understanding was that the large concern there was that they were offering these products to unaccredited investors and that they needed to offer them to either sophisticated institutions or accredited investors. And so that was really kind of the hit to Kraken. The Coinbase news that more recently came out, the Wells notice that came out against Coinbase, I think that was very much following in the same suit as Kraken. So I think that, you kind of saw Kraken go through it and settle. You're probably going to see a very similar story arc with Coinbase right now. Although I think Kraken elected when they got probably the news, like they probably got the suit around the same time. I think Kraken was just like, look, it's not worth the fight. Like we just want to settle it and get it done. I think Coinbase on the other side, because they already had the precedent with the Coinbase Earn program, and also because, put simply, I think they have a little bit of money and they wanted to use this as kind of drawing a line with the SEC and just not be getting pushed around. I think they were willing to fight it, right? And I think that they were willing to really go against it, which is what they're doing now. So this all to say that I think this thread of what are interest bearing amounts, like what is staking, like how is it classified, where is it, that's kind of been something that's been going on for a while. Fortunately, I'll speak mainly to maybe Floating Point Group's perspective for a second. Fortunately for us, we're a little insulated from this because we only work with institutions, right? We're only working with very, very, very massive institutions that have a lot of experience with this, that have worked with these products and services before and really done that, right? And when we're doing staking services for these people, in a lot of cases, these are really delegated services, right? So effectively, we're just providing technology where they're holding control of the wallets and we're kind of helping and assisting them to do those things in their activity. And so, we spend a lot of time thinking about how do we position and how do we make sure that that's done with regulatory clarity across different parts of it. So, anyways, that's kind of how I'd say. Like, one, this thread has been going on for a while. I think it's going to continue to fight out. I think Coinbase, in my opinion, I think Coinbase has a reasonable case of like, you can't shoot us for something that you guys never told us was right or wrong, right? I think regulation by enforcement is a pretty hard way to run an industry. And I'm hoping that ends up kind of coming out. And I think the second part about that is I think this thread is going to continue to be it. I really don't want a world where staking goes completely decentralized, where there's no institutions helping people, because some staking is very challenging, and I want to be open with that. Some of those things are just, they're not technologically clear how to do them, and the UX isn't good. So I think more people are going to lose money. I think consumers are going to be hurt.
Sorry for interrupting again, but do you have one example perhaps of that?
Yeah, I think easy examples of that. Yeah, let me pick an easy two really quick. And these are just really crazy ones that I'll pick that are outside the norm so people can learn. So Illuvium is a currency in the cryptocurrency space. It's effectively a gaming token, right? And you can stake Illuvium, so you can kind of put it in there, and effectively you'll get an APY for doing that. But when you redeem the rewards from Illuvium, you have to be very careful about how you both A, send the message, and B, what settings you pick, because you could either A, accidentally stake it for another period, or B, if you take it out then, you don't actually get it back in Illuvium, you get it back in escrowed Illuvium, right? So it's a different type of currency, and then you have to figure out how to trade that and deal with that. So the reason I give this example is like staking is complicated. Different blockchains do it differently. Ethereum for a long time couldn't even be withdrawn. So understanding the risk involved with that were pretty important. And yeah, I think when you just have a website that people can go and click 5 buttons, I think that's amazing. I back that. I love that. But I think at the same time, it doesn't have the same educational hurdle that some other places do.
Mm-hmm. Yeah, I think if not staking, or if staking doesn't really, if the regulatory changes when it comes to staking hasn't really affected your clients, what does actually affect them? Like, what are the main concerns that they have in terms of the industry as a whole? Like, is it regulatory uncertainty that they also experience, but in other domains, or is it mainly the just volatility of the market?
Yeah, I think the main things that concern people right now, I definitely would say that people are concerned about the regulatory side. I think the way that we just think about that is we've always been pretty transparent, and we work with a lot of both regulators and lawyers and counsels and things like that. So we spend a lot of time on that. So I think it's just spending more time with those institutions and with their legal teams and kind of walking them through both A, how we approach these problems, and B, how they should. I think the second point to your point is, yeah, I think at the end of the day, this is finance. And the great thing about finance, right, is that money drives everything. So in institutions or groups that are looking at this space, they mostly are just looking at this through a P&L perspective, right? Can I make more money than I'm at risk of losing in all this? And so I think price activity, volatility, activity, things like that, I think those are driving, and those always have driven the most interest, right? When coins pop or when coins drop, that's always when you're going to get the most amount of activity. And that's also when people are going to be willing to go really fast. So I think it's when things are kind of in a doldrum, when things are kind of steady. I think that's more when people are okay. Like let's look at how to build and structure these things. And I think when prices are really ripping or prices are plummeting, I think that's where people are like, let's do anything we need to get deals done.
Mm-hmm. And what are the clients in general doing with the money they invest? Like, is it very speculative in your opinion that they're trying to, let's say you have hedge funds coming in, they're trying to make gains in the market and they're using your services just by means of, well, liquidating their positions in a more reliable way? Are they taking a longer stake in terms of time horizon and really holding these for the long-term appreciation? Or what is your view there? And is there also a dichotomy in terms of use cases? Like, does it vary a lot between different institutions?
Yeah, I love your question on this. So we kind of have a mission that is really stop speculating, start investing. And I think what I mean by this is I think one of the big things that I love about crypto, and particularly that's come out in the past couple months, is I think people are less about how do I buy Dogecoin and have it 100x for me. And I think people are a little bit more long term, where they're like, okay, I'll buy this asset. It might go up by 20, 30% in the next year, but I'm not expecting a 5,000% return tomorrow. Right? I think people are a little bit more skeptical when they see these things. So the institutions that we work and the clients we work with, I think one thing that we really stress is just intentionality, right? Talking to people about like, okay, what are the things that you really want to focus on, or what are the things that you really believe long or short term might happen or otherwise occur that you really want to just be intentional about. So, if you want to de-risk out of a position, right? If you made an investment and you've made some money on that and you want to de-risk out of that, don't do that tomorrow, right? Do that slowly over time with a lot of intentionality. Let's work with you to create a plan and kind of a course of action that makes sense there. I think on the other side, for people that want to be invested in the space long term, it's very similar. People aren't dropping $50 million market orders, or at least not as much anymore. Sometimes that definitely happens. But yeah, I think making sure that people just have intentionality, because I think otherwise that's just how you lose money, right? Like emotional reactivity in this space is just really bad for everyone. It's bad for ecosystems. It's bad for investors. It's bad for retail. I think it's bad for everyone. So I think the people we work with, we try to both A, they typically have, and B, we try to instill a much more like long-term intentional mindset, right? Okay, you want to sell this, don't sell it tomorrow, sell it over the next couple of days or sell it over the next month, right? You want to buy something, okay, great. I don't know if the price is going to go down or up, but I promise you it's going to have some volatility. So why don't we take advantage of that and try to do a little better than the market? So that's at least kind of how we're thinking about these things. Yeah, but it's a great question. Like, I think to your point on the dichotomy, yeah, I think a lot of people are a bit optimistic. Crypto has been driven mostly by speculative pricing, right? Like speculators have really driven these prices up. I don't think economic value is necessarily matching it, right? Go look at a chart over transaction fees and how much are incentive rewards versus how much are actually coming from the actual like transaction fee. It's right, like it's pretty bad, right? Like most blockchains, I think are 75% plus incentive rewards. So the reason I say this is like, I think it's a bit optimistic to believe that just because people are going to more use blockchains, prices go up. Because if speculators aren't as active in this market, I think prices are definitely going down. So yeah, I think there's a bit of a dichotomy there.
Mm-hmm. I guess one additional use case of being invested to begin with in the crypto space is diversification. So, I mean, a lot of the global financial markets are very highly correlated. Like, we've seen with market downturns now that it's not just one location that's affected, but really all the major exchanges are quite severely correlated. How correlated would you say the crypto space is to macroeconomic trends in general?
So it's funny. We actually worked with a group of data interns to study precisely this a while ago. That correlation goes up and down. I think we were seeing. I think there's a couple of first things to say. In bear markets, I think everything is correlated, right? Crypto is clearly a risk asset, and crypto is also a liquid asset. So you can sell it pretty quickly and get your money back. So I think when markets start compressing, as we saw late last year, Q4, and early parts of this year, people sold crypto hard because they wanted the cash. They wanted to be able to do other things. They didn't know where the market was going. So they wanted the cash. They wanted it now, right? Sound like a JG Wentworth commercial. Anyways, So I think in bear markets, risk assets are all correlated and crypto's risk asset. In bull markets, I think we're actually starting to see some amount of deviation from that trend. Like you're seeing right now, where like crypto and Bitcoin seem to be, really pulling back ahead pretty strong. The stock market similarly coming strong, but not as strong. So I think you're starting to see a bit of decorrelation. I think if you just put on a thinking cap for a minute and think about these assets, Bitcoin, I think, will slowly appreciate over time, right? Fixed supply, slowly gaining amount of interest. I think that will probably just slowly appreciate, right? Like it'll go down probably and up at some point, and I'm sure I'm going to eat my words on this, and I definitely wouldn't bet $1 million that it's going to be at $1 million. But Bitcoin will slowly appreciate. Ethereum may as well, probably will. There's deflation in that ecosystem, so it would make even more sense that that happens. So it probably makes sense that those things will inflate, like they will go up in value, and they probably should go up in value a bit more than the stock market, just because the stock market is going to be USD denominated and the US dollar is going to lose some value. So it's going to be, Bitcoin is going to be kind of holding a better par value. Um, so, anyways, that's kind of how I would say. I would say that slowly over time, I think these assets will more and more decouple because I think there are more long term trends that are going to hold. I don't know. You? I'm curious. What do you think? You think things go up? You think things go down?
Well, I would say in general, assuming over time the markets actually start to display more reliability than currently, then I think the crypto space, as so many people have pointed out, is a very promising future candidate for how we're gonna just transact in general. I'm not convinced that the currency of choice would necessarily be Bitcoin, and I think the hinging question, in my opinion, is if, let's say, we have a transition to one cryptocurrency or another as a new reference-based currency, let's say, you would have some selection process of what that would be, and most likely, my prediction would be that you would have one strong candidate. Like, regardless of what that currency is, there would be one strong candidate that holds a majority stake, because once you have enough people flocking to that particular currency, that would incentivize others to do the same for major trading. That's my Lehman's prediction, let's say.
I mean, dumb question on that, but you wouldn't say that that's Bitcoin? You wouldn't say that Bitcoin kind of has that network effect?
Bitcoin for sure has, the largest network as of now, and if no disruption happens in the market, then, and there's just this gradual increase in terms of funds that are concentrated in crypto, then yes, I think that's the most promising candidate. But I think there are many, like, let's say you never had these stablecoin crises that we saw. I think that would be another promising candidate, just for the sake that, if there wasn't a disrupting market event like that, you would have a very strong story, at least, to tell people regarding the stability of holding this particular asset. And that might have worked in case it wouldn't have broken down. Like, if that wouldn't have happened, then the longer the story keeps going, the more comfort the market overall has for the technology. So, I mean, making predictions at this point of what the most promising currency would be, I don't feel like I could make a very realistic one. But nevertheless, like I don't see crypto as, or I don't see Bitcoin as the necessary winner.
Yeah, I think that's fair. I think there's a couple of very obvious threads there to me, which is first off, this whole idea around central bank digital currencies. I don't think central banks are actually going to want to build their own currencies. So I think it's more than likely that they choose stablecoins and align themselves or technologically align themselves with what those do, right? Like the new kind of stablecoin banking bill in the US, like it very much is funny. I was talking to someone from Circle. They were like, "Oh, like we are big fans of it because we feel that that bill is more or less saying if you're going to do a stablecoin, you have to do it in the same way Circle's done it." Which, hey, go team! Like I'm glad if that's the case. They did a really good job. They should pay their lobbyist even more. So I think CBDCs are unlikely to build their own currencies. I think they're probably likely to partner with private institutions. However, I do think you're going to need some asset that is not US denominated. And to me, at least the most promising candidate, and I think the only one that stands a chance, is Bitcoin. And the only reason I say that, despite me having a lot of love for other layer ones, is that I think Bitcoin is the least contentious. I think when you go look at any other currency, so like if we just go look at coin market cap and we just look at the top ones, right? BNB, XRP, Cardano, Doge, Polygon, whatever. I think all of those kind of have allegiances. And I think that I think people will be nervous to give them more power because of those allegiances, right? Like BNB, like, I don't know if people are going to want to propagate that because, like, what about Binance getting bigger and stronger and scarier, right? The US might not like that. Ripple, well, yeah, the US government might not like that too, but the Asian side of the world might not either. Like Cardano, okay, maybe, but there's like a Cardano Foundation and other parts of it. Like, do you really trust, like, what degree? So the reason I'm just saying that is, to me, when I look at promising cryptos and like what could be the mainstream ish, or the central reserve currency, yeah, I think Bitcoin's by far the leading, just because Satoshi going away from the picture was the best thing that ever happened to it.
Mm-hmm. I see that we need to start wrapping up rather soon, and I have a couple of final questions that I want to ask you as well. So I would switch to those now. I would be interested in the upcoming year now, 2023, but also like we're well quite some ways into 2023 now. So like the upcoming year, what are sort of the key priorities for your company? Like what are you trying to achieve? Do you have any clear objectives that you can share?
I think I'm more than happy to. Yeah, so there's a couple of key priorities that I think we really are focusing on. First of which is marketing, I think, is a big focus for us. I think historically we've been pretty quiet and pretty kind of held to ourselves. We want to do a little bit better job about at least, kind of putting our name out there in the industry and kind of doing that. Two is we're pretty excited about this collaboration that we're launching on kind of offering crypto trading from qualified custodians and kind of doing those entirely within those environments. So we're very excited to kind of launch that with kind of post-trade settlement and everything. So that's kind of something that's been a really big priority for us in order to push out, is right, structuring that and doing that. And then I think the last part is we want to get a little bit more serious on the financing side. So right, we currently run the leading altcoin execution desk on the market. We're pretty happy with all the firms we work with. A question that constantly comes up with people is both A, how do you lessen my counterparty risk? B, how do you make my capital work more efficiently? So us finding inroads and partnerships with financing groups, that's something that's really cool to us. So I'd say those are them. And it's funny, our team every year tries to kind of get one really big, nice thing. And I think next year, what they really want is a yacht. So that's definitely a key priority for next year, is financially kind of put us in the spot. No, I kid on that, but I think, yeah, for us, getting this launched with both the qualified custodian and kind of the offering there, that's something that we're very excited about. Second, marketing and getting the word out a little bit more. And third, which is just expanding our services across financing and other verticals.
Mm-hmm. In terms of marketing, what kind of clients are you looking to acquire in particular? Like, do you see a gap in the kinds of clients that you're acquiring right now? And what are you kind of thinking in terms of where you want to market this?
I love your question, actually. No, the honest answer is we don't really see a gap. It's mostly just we haven't really done it much. Most of the people that we work with are just driven by referrals. Someone really likes the business, so they're telling it to one of their friends or whatever. Like today we work with, say, about 8 out of the top 25 blockchain foundations. So we work with a lot of them. Would love to expand across that vertical. Like most of those other groups, it's not that they're not interested in us. It's just that we've never had that conversation with them. And so we're really interested in doing that. And we're really interested in talking to more groups, seeing how we can support the ecosystem. We're helping people out with some stuff across decentralized trading and kind of DEXs and liquidity support on those. And so like we've really started to kind of expand how we support and how we work with these different institutions. So yeah, that's kind of how we're like really which groups we're targeting.
Do you have a view yet on how other companies in the space that target similar clients, like how they market themselves right now? I get that this might be early days and that you haven't really investigated sort of the marketing strategies of others, but if you have a view, that would be very interesting to know.
Yeah, I think, I'll be honest with you. I think whenever I've looked at other people's marketing materials and I've looked at ours, I've always been shocked at how similar they are. Like whatever terminology I think is really grand, noble, and we're the smartest people for coming up with, uh, I go and look at a competitor deck and I'm like, wow, they use the exact same stuff we do. Um, so what marketing plan? I think first and foremost, you opened up this interview by asking about trust. I think trust is still the bedrock of this ecosystem. So I think establishing that trust and getting to know people is very powerful. So going to conferences, talking to people, spending more time, getting drinks, going to happy hours, doing things like that. There's a good saying I've once told that people don't buy from you the first or the second time they meet you. They only buy the 10th, which is kind of like just, an anecdotal way of saying like, it's a hell of a lot easier to sell to someone once you know them than if you don't know them at all. Um, So I think that's the traditional marketing strategy. So I don't think it's like an SEO, Twitter, TikTok, going out there kind of thing. I think it's a much, much, much more targeted and focused campaigns.
That makes a lot of sense. The next question I would have is, for the future, like in the space, do you have anyone that you think I should get in touch with and interview? Given all the players that you have and given your sort of expert view, do you see something that you think is some evolution in the space that you think is really interesting and that you think I should talk to?
Yeah, I think there are two that I think are kind of cool and interesting. One is a group of a good friend of mine named Joshua Frank, who runs a company called The Tie, effectively the information exchange. They're kind of building the Bloomberg of crypto, right? Providing a terminal where you can both access all market data, all on-chain data, and all subsidiary data that might be relevant to any trades or transactions you're trying to do. And they actually just launched a messaging integration to that, which is pretty cool. So yeah, I think they have a particularly unique view because they work with a lot of institutions, but they also work very, very, very heavily kind of on a, hey, we're just providing data. So a little bit less in the institutional space. So I think that's one. And then the second group is a group that we work with called ML Tech, who effectively works with a number of quantitative funds and other firms to help them kind of allocate funds across fund to funds and groups like that. So say you've got some, quantitative shops doing delta neutral trading, market neutral trading. It's got some strategy with a high Sharpe, pretty good APY, etc. They effectively have a group of investors that will allocate to those and then, kind of split the returns appropriately. So they're a pretty good, cool group because I think more and more crypto is about access. And I think very few groups have the infrastructure and ecosystem to be able to interact with all these exchanges. And I've been always really impressed by everything that they've built and made. So yeah, I think those are maybe some. I think there are some other groups that I think are very interesting on the blockchain side. But yeah, maybe those are at least some. Yeah.
Awesome. I think that's very good, a very good pointer. So I'll check it out. For people that want to get in touch with you, where can they find you?
Yeah, please reach out to me in any way, shape, or form. My email is john@floating.group, JOHN@floating.group. Our website's floating.group. You can find me on the Twitters at John Peurifoy, JOHNPEURIFOY. So please feel free to reach out to me any and everywhere, and I would love to keep the conversation rolling.
Fantastic. So with that, John, I would thank you very much for joining me today. I hope you have a great rest of your day and speak soon.
That sounds great. Thanks, Nick. Bye.